Welcome to the Pump and Dump channel for another video. It's been a few weeks since I put out a video. There's of course not that many people who watch my videos, so I guess it's not impacting humanity in a bad way overall. But I've been thinking a lot lately what to do with my channel, where to take it, and I've had some discussions with some friends, and I'm going to get into two topics in the video, and it's going to kind of like redefine the direction of my channel, where I'm going to take it, what I'm going to do with it. So I'm going to look at here at the Dow Jones Industrial Average, the chart, in the first point of this video, and then in the second point or second part I'm going to look at the launch of a theoretical portfolio, and the goal of it will be to demonstrate my ability, my skill level, to other people who are interested in investing, because I see a lot of people on YouTube who make videos about investing who clearly have no idea what they are talking about, and then there's some other people who may have, let's say, had some financial success in the past, in the last bull market, last decade of a bull market, being on the long side, and then there's of course some other people who have just been successful building a big YouTube following, who may have a subscription service where they're selling their access to their portfolio, to their chat groups or whatever they do. And the idea, of course, of launching this portfolio will be to demonstrate that, number one, I know what I'm talking about. Number two, I have considerable amount of skill when it comes to picking stocks and making the right call, when to buy, when to sell. And I'm going to do this over a 6-month period going into the year end, and we'll then see how it goes. So getting to the first point, talking about the Dow Jones. So number one, you can see here how I see things progress. I put lines on when I see clear patterns. So of course, like this downtrend line I established here. So once we broke out above here, of course, they're considered the downtrend to have been broken. I managed to see here that there was a clear channel when we bottomed out. I kind of saw that there was a channel because it was kind of parallel to this one. And very important here, the RSI. This was something I was looking at and I was unsure about it, that this would kind of like be in terms of the direction, the momentum, that this would give us the direction. So the RSI here at the bottom, it kind of formed this triangle, and we broke it to the upside when we had this big move up here. This came on the back of course, all these QE programs that have been discussed all the way down, and the fiscal stimulus programs, and all of this came to fruition down here, and then we kind of bottomed for whatever reasons, because we hit some technical support over here, I guess. This level here at 18,000 was the technical support that held. So lots of things came together, but the RSI kept looking positive, and we formed this triangle. Trump talked about it being a V-shaped recovery, so of course the market immediately broke the uptrend and took us sideways, building this triangle with this downward triangle forming here. And everyone here on CNBC, I saw some people, they were talking about, oh, we're going to retest the lows, we're going to make newer lows, and all this nonsense. And I remember looking at the RSI here, building a bullish flag, and I was like thinking that this was a bullish sign that we would go up. And lo and behold, the 15th of May we broke out of this wedge to the side, and then here the 18th of May, which is my birthday, we just shot up like a rocket, and they started going up here all the way, forming this trend line here, all looking good. And then getting into the 5th of June, Friday the 5th of June, Trump gave some speech talking about how the crisis seemed to be coming to an end, and everything was reopening and blah blah blah. RSI of course was overbought quite substantially, and then the following Monday we peaked out, and since then we've been selling off. And you can see here we broke the trend line quite clearly. We we kind of started forming a downward channel here, where we broke out of, hit the support here, and bounced here in the bear flag for the last couple of days. And We have broken the bear flag to the downside, so I see us going back down to 25,500. It's going to be probably a slow grind, and then we're probably going to see, like, at some point another big move down that will scare people out. And the stories have already been floated about a $1 trillion infrastructure plan, and I want to remind people of the waterfall of hope. Things just keep falling and we get fed all these stories. There's going to be a $1 trillion infrastructure plan and this and that. And I was listening to also the Fed chairman talking to Congress and senators online, or whatever you want to call it, this meeting statement to the Congress. And he was basically also saying that there's most likely going to have to be more stimulus coming into the economy, and the Fed basically cannot grant any money for certain things like infrastructure projects or whatever, or people to buy themselves a new car. They can only lend money, and they have this facility that will lend money to companies that were solvent before the crisis. So all the energy companies in theory can borrow that money because they were solvent before the oil price dropped to basically $30 a barrel on the long-term price projections. And yeah, the energy sector is very important because that was one of the things that Trump talked about on Friday the 5th. He talked about how oil had gone from -40 back to 40 and looked like we were back where we were before the crisis. And oil has been bearish since, but it's showing life that it wants to push up higher, and we'll see where it goes. Yeah, so here, this head and shoulders, I drew this quite a few days ago. I guess it was on Tuesday or Monday, somewhere here I started drawing this head and shoulders because I thought, maybe we build a head and shoulders and then we go sideways and we crash down here and then we go down here. Of course, I can't prove that I drew that because they don't give you dates here when you put these things on, and I didn't make a video about it, so you can believe me or not, it doesn't really matter. That was kind of what I was thinking, but you can see here that we have a head here and the shoulder is here, and that suggests we're going to go lower one more time. And the RSI here is also broken this uptrend, and it's the downward channel. But on the positive, what supports was finding support here and bouncing higher is the fact that this looks like it could be a bullish flag as compared to here. This is a bullish flag and this is a sharper bullish flag, but long term it could take us to go higher, and then we'd retrace and everything can go back into an uptrend if there is enough liquidity injected into the system. So that's kind of how I see it. Next month or two is probably downside pressure until we see some infrastructure bill being passed and stuff like that to get the economy going again, getting people back to work, building bridges to nowhere. Maybe they'll build a wall to Canada because you want to keep the Canadians out next, and we'll see what happens. So next point, the portfolio. It's going to be called the Pump and Dump Stock Picks portfolio. The idea really came from a friend of mine. I didn't want to do this for the longest time. I've talked about individual stocks on my channel previously, but I feel like more and more like it's just seeing what other people are talking on their channel, especially the Nordic American tankers crowd who have no idea what they're talking about. When I see stocks like that getting pumped like there's no tomorrow, I kind of like question what I should be looking at, how I should be thinking about things, whether people should be even watching videos that have stock recommendations, let's call them, because of course they say it's not a recommendation, but they're saying, hey, look, I am doing this and I'm really successful, and I'm this guy who has 50,000 subscribers, so obviously I know what I'm talking about. And the worst thing that you can have is someone who has been successful in the longest bull market ever. I guess it's been the longest bull market ever, and they've been successful because they've been on the long side during the bull market, and then they start thinking that they know what they're talking about, and then people start following them, and it's not a good thing, because financial analysis is not easy, and it takes a lot of work to get the financial analysis right, to be able to project where a price is, where the price should be, well, not say project where it is, but to see where it is and project where it should be based upon the information that you can see in terms of the you know, the prices that exist at the time and the direction of the market. So yeah, that's going to be the basis for why I'm doing this model portfolio. It's going to demonstrate, number one, that I have a considerable amount of skill when it comes to financial analysis, and you know, not just picking the right stocks, but also knowing when to buy them, when to sell them, what the upside is versus the downside, quantifying that properly. And yeah, that's basically what it's going to be about. So it's going to look like this. I'm just going to, every time I buy something or sell something, I'm just going to save this in my file. I'm going to post a video, and that's going to serve as a record on YouTube as to what I've done, whether I've succeeded or failed. And the idea is, of course, to do this over 6 months, and we'll see then in December 31st where things stand. Now, the rules are pretty simple. The rules are, I can only buy at the close. I cannot buy at the close if there is positive news that comes after the close. So I use a price as of the close of African Gold Group. I'll just demonstrate here that this is the correct price, so 33.5 at the close, and for Range Resources it's 671 at the close. Now I'm going to talk about why I selected these and what the projections encompass, how I see these materializing, and of course this is the amount invested. Starting portfolio will be $10,000. Cash is down to 7 because I've put in these here, and when I sell something, you know, I'll get the price here, and then this will update. So if I like sell something, then it will be let's say I sell, then the cash goes back up, and this is basically how it will work. So talking about these individually, so African Gold Group, why am I putting this buy rating on it? So this morning, before the open on the US market, they had some news that came out that I've been anticipating for a long time. I mean, I was waiting the whole quarter for this to come out. The definite feasibility study, they've already put out the basic results that you can like quantify what this looks like, and they have like the NI 43-101, which is the complete report, which will have everything I need in to review to see what seems to be missing, what seems to be, you know, miscalculated, what doesn't make sense. I need to check a lot of things to assert that these numbers that they come up with are actually reasonable or make any sense. But in terms of delivering what they've set out to do since last May 2019, when Stan Barty got in and started being the CEO, he's kind of basically, you know, it's not been like they've followed the plan 100%. There's been some adjustments from time to time, but overall they have done what I expected them to do, so they've kind of delivered on this. So looking through some of the features here, they talk about an annual average production of 100,000 ounces per year for the first 5 years, and the total gold production would be 728,000 ounces over 9.4 years. So obviously, like, why would they build a mill to process 100,000 ounces if they're only going to do that for 5 years, and then they're going to go down to, what is it, like 40,000 for another 4 years? Or is it more? Is it 60,000? Who cares? Whatever it is. Why would they, or 55,000? That's probably what it is. Why would they go down to 50,000 for the last 4.5 years? That is kind of an important question, and I'm going to address that soon when I get down a bit below. So they're talking here about average total operating cost of $704 dollars an ounce for the life of mine. That it's important to note that up front the initial capex that has to be done will make the first years more, make the gold, the cash costs, with including the sustaining capital, the all-in sustaining cost, that will be then higher than this $704 an ounce. But cash costs here, these are basics. Once we take in the all-in sustaining cost, it's going to be higher. And I'll get to maybe some numbers later on. So life of mine, all-in sustaining costs 782. The as mentioned, the initial years will have higher costs, all-in sustained costs, because that's when most of the capex has to be done. And then as they progress and less sustaining capital is needed to keep the thing going, the costs will drop. And then of course, like going into the last couple of years when they're producing less, the feasibility study would suggest then that the costs would also start to rise a bit, because they're processing less volume with the same amount of equipment that they have, they have running, or whatever. It doesn't really matter. So after tax, post-tax net present value at 5% here, 226 million. At $1,530 an ounce gold. This is important because 10% of the mine is owned by the government of Mali, so that's going to give like 200 million after tax at 5% with this gold price here. So these numbers here are not very useful, apart from just a guideline. What I really need is the NI 43-101 to make a detailed calculation, and then market to market with $1,728 an ounce gold that we see here, and also using a different discount rate. If I want a 15% discount rate to see whether the capital financing will come in at, that's kind of what I would be looking at, getting the exact number to know what the current value of the shares should be. And capital expenditures 125 million plus contingency, and this is a bit higher than what they initially projected for the 2016 study, which only looked at 50,000 ounces a year. And of course they're scaling up, building the bigger mill. Talking of course also about using these solar thermal power plants to supply power to the Kobada projects. Very important to know that this is for the environmental, social, blah 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 promotion. Now getting into what is very important is of course looking at the reserve here that they have stated that they have this 728,000 that they want to produce. They have a reserve here of 754,800 ounces. Of course you have to take into account that not everything that is there can be mined, so they're gonna of course still leave some in the ground, doesn't really matter. Getting down to some of the tables here they have published here, grade per ton. I had thought that, of course here they're using a $1,450 gold price. That's kind of what falls into the category of what is mineable and economic, but at like $1,728, that all should be bigger, because you can get like more, you can get more out of the ground because more is economic. But anyway, here the grade is very important, because I had thought from looking at the drill holes that they had published that they probably would be at 0.3 to 0.5 grams per ton, but they've kind of come out with this amount here that is at 0.95 and 0.81 grams per ton, so that's kind of much higher than I had initially thought that they would come out when I was doing some calculations. So this is all positive. So this is what they have proven, and what they have proven to be there, that is probably and proven to be there, 750,000 ounces. And then here, this is also very important, the measured and indicated category. If you add this together, you get to almost 2 million ounces of gold that they think is there at the $1,450 gold price, which like let's say only like 80% of this gets through, you still have to considerably higher amount, and the the net present value calculation, that is based upon only the proven and probable, not on the measured and indicated. So the value here is quite clearly, I mean, it's without a shadow of a doubt, it's much higher than what the study suggests at a 5% discount rate. And also, and I think I mentioned this in some of my last videos, I can't remember though, they do have a presentation on their website that they reference, well, they don't reference it here, but you can make reference to it yourself, and you can look at it like almost every month they update it. And they have talked about the project area that they are looking at, that they own, is about 7 times as big as what they've explored. So they've only explored about 15%, so that means 7x upside. So if you like project these numbers over the entire space, you can look at like potentially like 15 million ounces of gold being over the whole space. But it doesn't necessarily mean that it's a homogeneous type of area. It could be like just this area is good and the rest is crap, and maybe they only have 5 million ounces or 3. You really don't know. So inferred is just guesstimated, where they just like make some assumptions where they can't really like point at anything really being there. But anyway, it doesn't really matter. What really matters is that, like this study, well, this news release is not the actual study, so I can't really assess exactly what is there, but I can see with my own eyes that what is there is quite considerable. So I have no issue with buying this stock. I mean, even at these prices now at 33 cents and a half, I'd not see myself inclined to sell it at any point in time. They had a table down here which I'm looking for now. Here, sensitivity analysis. These are very interesting. So for the after-tax valuation here, they give like a table like at 5%. They guesstimate it to be 124 million at $1,300 gold price. So basically it's like 112 million net present value to the company at this low price. But it comes down again to the discount rate, and you need to be able to see the whole thing so you can put in your own parameters, and this is kind of what's tricky about these companies. But you can also see at higher gold prices how this rises. At the current gold price, which is closer to 1760, it's like 330 million. So let's say 300 million to the company, or 280 to 300 million to the company at the current gold price of 1728. That would suggest an upside that's quite considerable, because the stock price, it's it's at 33.5 cents, and there's about 100 million or so shares outstanding, if I remember correctly. So the market cap is about 35 million Canadian. And if you convert that to US money, that's about 23 million US dollars. So if you look at the upside here, it's quite clear that the upside is already almost like 10x going from the current price. Of course, you have to also account for the fact that the financing has to come in, and that is the important part, is figuring out what the value of the investment is to an investor who wants a 10 or 15% discount rate on the cash flows, a 10 or 15% rate of return on the cash flows. And the key here is to have like some rules of thumb, I guess. And for me, like when I'm looking at a 15% discount rate, to me that is usually something like a 50% discount to a 10% discount rate on the cash flow. So if something is worth 100 million at a 10% discount rate, it's probably worth 50 million at a 15% discount rate. So if I can find like here this 10% discount rate here on the cash flows that would come at these gold prices, I would say that using this price here, this valuation here, let's say 200 million for the for African Gold Group is the valuation, because of course I have to take out the 10% for the government that they own, and then I also have to make some guesstimate as to how this valuation would stand up with a 1728 versus a 1760 gold price. So I'd say it would come out at about that, and we are currently at 25 million market cap plus minus, so you can see it's like an 8x upside from here. So anyone who's investing using a 10% discount rate at the current gold prices, they would be happy to finance at the current price, or even at 4 times the current price. And this is kind of why, plus or minus, I get to a 125 Canadian dollar share price. The key here is that we need to wait until the 43101 comes out and give the investors time to study it and then make a decision as to whether they want to put money in. And we need to know where the gold price is going to be at that point in time. Maybe the gold price is down at 156, and if we're looking at 156, that would give us like 140 million. Of course it's a bit late here, so I'm mentally a bit slower, and versus the 25 million market cap that we see right now, the upside is not 8 anymore, it's more like 6. So what would investors be willing to pay under this circumstance? Maybe 3 times 25 million, so 3 times this here, so $1. So that's kind of how I get to this. It's a guesstimate. I can't get any closer without seeing the exact feasibility study, but for me it's clearly at least 4x from where we are now is where it should be, and or 3 or 4x, let's say. And going into the future, if they can get this thing working properly and they can get it rolling and get the momentum going, and the gold price is still good, they probably will manage to do some more exploration, and they'll build the reserve out into 5 to 15 million ounces potentially. And under that circumstances, in 2 or 3 years, this stock could do it. It could go to $2 to $5 Canadian. So that's my reasoning for African Gold Group. Next one is Range Resources. You can see, of course, here the invested amount is different. Why do I put less into why I see the hugest upside versus the one where I not necessarily see the biggest upside? So Range Resources, this is very important. This is all down to financial analysis. Why this one for me at this current price is a buy. The analysis, and I could show it here, but I'm not going to go there because it's a lot of work, and I just decided that I won't give away my stuff for free anymore. I kind of did share some of my my valuation models in the past, but it's a lot of work to get these things right. The key here is to understand that with Range Resources, it comes down to the valuation. Range Resources is a very unique company in the sense that it has a lot of natural gas liquids relative to oil and gas in its reserves, in its reserve. Other companies, they tend to be either heavy natural gas or heavy oil, or kind of balanced, and natural gas liquids themselves are not such a big feature in most of the companies that are in the oil and gas space. And so what is usually the rule of thumb is for companies to, when they're making the annual report, they usually state the price that they achieved for the natural gas liquids as a discount to the WTI price for oil. And this is what analysts use in the valuation model for when they're programming their bots and trading it, because they want to trade one oil stock versus another one, I guess. And this is, may not be true, but this is what I see in the market, how it's priced, and it's really priced off of that. And the truth is that the natural gas liquids are much higher than the the oil price, adjusted for a discount that it was you know adjusted for the discount that the natural gas liquids traded versus oil in the last year, because oil prices have collapsed quite considerably and natural gas liquids, just like natural gas, have held up much better. So here is a clear delta, and it comes down to when will the market realize that there is a differentiation. The analysis I have done is that the management has bought a lot of shares near the lows in March, $2 and $3 a share. Like they put in, like, I don't know, like 6 million or so of their own money into their own stock in the open market. And I think the management will have some, because they did get asked in the last conference call about the natural gas liquids, and the analysts, they seem to have no idea how to think about this. That's kind of the impression I got from the conference call. But the management knows, and the management now has an incentive to clarify this. So the management is going to probably, make reference to the fact that the natural gas liquids prices are holding up much better than the oil price, and that the stock is mispriced and blah blah blah. And then we'll see it being re-rated. The analysis will come out clearly, and then we'll kind of see a stock price closer to $10, $11, maybe 12. It depends on what the oil and gas prices and the natural gas liquids prices do. So this is kind of how I see it. So you can obviously see that the upside is there. I mean, for me, this is a mispricing, so the risk is relatively low because of the delta between what the current price is versus what the current valuation is. So the price should be at the current valuation, but it's not. And as time passes, it might converge towards it, and there will be some catalyst that will bring this out, and then we'll just reach that. So this could be in the next conference call, it could be sooner, later, more likely later than sooner, but this is how I see it. So I'm going to leave it with that. This is going to be the first video where I talk about building a portfolio. As mentioned, I only can buy at the close, and I use the prices as of the close. I will bring it up one more time. So here, range resources, 17th, 4 o'clock the close, and African Gold Group, 33 cents and a half Canadian at the close. So we'll see how it goes, and in 6 months I will make my summary of how the model portfolio goes. And then, I hope to prove that I am much better at this than most of these, or all of these YouTubers who have these channels on investing, and for the most part don't know what they're talking about. So I'm going to leave it with that, and then we're just going to make this quite clear that this is not a recommendation for you to buy or not to buy these stocks. You should not base any trades off of what I do here on my channel. I might not even bother to continue it. I might get run over by a car and be diagnosed as a victim of the coronavirus, because I'm flat like a pancake, and I can't I can't refuse being tested for the coronavirus, and they say I'm positive, and then I'll be in the statistics. So yeah, don't base your investment decisions off of my videos. If you want to do that, of course you're free to do. I really don't mind if people want to do it. I feel like I don't want to have that responsibility if someone buys a position in what I have talked about on my channel, and they feel like like I got them into it. I don't want people to have that feeling that I'm getting them into it. There's all these videos where they talk about huge upside and low downside. I mean, I can quantify these numbers, I can justify them, but I think what really matters is over time is seeing somebody, how they react and how they build a portfolio. Because most of the people who have these YouTube channels where they're trying to sell you a subscription to their platforms or to their investing group or whatever they have, where they charge you 1,000 or 500 or 300 or 150 or whatever it is. A lot of these, they try to lure you in with talking about this and about that topic, and then they try to say, oh look, my portfolio is up this much, and they usually do that when it's looking really, really good, and they want to then show off that they're such geniuses. Of course, they don't sell when they're up that much, but they hold on to it, and then they go back down, and then they go from being plus 50% to minus 10 or minus 20%, and you know, that's just the way it is. So yeah. So none of this should be taken as investment advice or recommendations to buy. My calculations can be correct, but the outcome can still be considerably different, and my calculations could be completely incorrect, and the outcome could be better or worse. You never really know. So I'm going to leave it with that. If you like the content, of course, you can subscribe, and if you have any questions, comments, or opinions, you can leave them in the comments section. And with that, I'm going to say have a good day.